Hello Wolfpack, I'm back here on Bitcoin. I've got a very interesting video to make today, not in terms of the market movements, but generally speaking in terms of new techniques for analyzing the market. Now, I looked over this a couple of times in the last video. Inverting the charts is one of my new techniques. I wouldn't call it a new technique per se, I've been doing it for years. However, for a lot of people it is a new technique to use, but before we even get into any of that, what we can look at, generally speaking, is the fact that Bitcoin is in this general compression pattern, which is a bearish pennant formation, where you have a long flag to the downside and then a consolidation period through which you can break either up or downwards. You'll notice that I've completely left out this wick downwards from the equation here. I've done that because that was a capitulation wick. It wasn't actually based in rational price action as seen by how fast we dropped below and then jumped back upwards. On a lot of exchanges, that wick wasn't even there. That whole candle wasn't even present. And so yeah, I'm taking that out of the equation right here. When you have capitulations like that, massive drops to the downside in a very short period of time, you can in fact take those out of the equation. I would still consider this a bear flag formation as the narrative is still there. The narrative for a bear flag is a sharp drop into a consolidation pattern. And that's what we have here, regardless of whether we had this candle downwards here from 28k to 24k or not in a matter of a few hours. That doesn't take away from the narrative. The narrative is sharp drop into consolidation. We're seeing that right now. And what I've had said in previous videos is the fact that, well, if we break downwards from this consolidation pattern, you would expect to be seeing a 24k Bitcoin. However, we have made moves to the upside here. Is it a confirmed breakout as of yet? I wouldn't say it's a confirmed breakout. Why is that? Because we haven't closed a 4-hourly candle above it yet. We've only opened a 4-hourly candle above it. And so it could very easily be a fake out at this point. And so at this point, I would say it's a little bit too early to say as to whether this is a confirmed breakout. But if we do see a breakout, I would expect to see an absolute minimum of a 33k Bitcoin within the next few days. And if we see a breakout to the downside, I would expect to see an absolute minimum of a 24k Bitcoin within the next few weeks. Okay, so that is kind of a scenario for Bitcoin that I'm looking at here in the shorter term. And zooming out to the longer term chart, that's just the same narrative kind of taking place. Where is our resistance on the longer term chart? What is the volume doing? Well, we can look at that right now. The volume, for example, is actually downtrending quite massively in this consolidation period, which is typical of consolidation period. And what it represents is a lot of people on the fence, right? Zooming up just so you guys can see it a little bit clearly, we saw obviously that massive spike in the volume during the capitulation event, but obviously as of recently, we've had a downtrend in volume during a sideways consolidation period, which is typical of consolidation. It means that not many people are doing anything right now, which explains why there's not much volatility in the price. When the price is compressing and compressing and compressing, generally speaking, you're getting less and less orders coming through, and it's going to come to a tipping point, the tipping point being when we break out, and that's when you start to see the influx of volume. And so do I expect this breakout to work or not? I can't say that for sure, but I am looking at the volume to see whether there's going to be a volume influx to determine as to whether that's going to be a successful breakout or not. Looking at something else, something like the bull market support band, for example, Benjamin Cohen's favorite indicator, talks about it every bloody day. That's all the way up here at around 38k, and so we don't need to worry about that at this point. And then we bring up stuff like the 50, like the Ikomoku cloud, like the Gaussian channel, bring up the bull market support band again, like the 75 SMA, like the Bollinger Band center line. What we can see, generally speaking, is that all of these indicators that I've just brought up here are within the same vague price region. They're within 44k, right, and 37k. So there's a clear area of significant resistance between 44 and 37. And so if we actually go ahead and delete the entire chart, right, and bring up something like the volume profile, the VVPR, which we actually don't have up right now. Let me get it up 1 second. We can see that the volume profile is actually telling us something quite interesting about Bitcoin. It's telling us that right now, we're in a region we haven't really explored too much in the recent bull market. And so right above us is a massive, thick cloud of resistance, right? The way I like to conceptualize a volume profile is it's like mountains and valleys. When you're running up a mountain, right, the mountain being this spike in historical volume in the volume profile, it's very, very difficult and it goes very, very slowly, and you're quite likely to fall backwards and roll back down the hill. When you're in a valley, right, or when you're falling down a mountain, it's very easy to run down that mountain very fast. And so right now we're in a valley and we're trying to run up a mountain. We're trying to run up to the upside to 33k, and we can see that there's a massive hill ahead of us, meaning there's a lot of resistance above us in that region. It's going to make it quite difficult to get there. And so that's a really good way to conceptualize the recent Bitcoin price action, right? We're in a valley, we're trying to run up a hill, there's a lot of resistance above us, and there's not a super strong amount of support below us other than the horizontal support, which is at 28.6k. However, that's a well-tested support line, and yes, I would expect it to fall in the future. It is a matter of when, not if, in my personal opinion. And breaking that down even further, it's really quite easy to understand, right? We were in a bull market on both these occasions. We were in a bull market here, broke to the upside. We were in a bull market here, broke to the upside. These are the last 2 times we tested 30K. Do you think we're in a bull market now? Now, a lot of people would say, well, yeah, look, we are in a bull market because we're still holding 30K. And so we're still technically in a macro, not a lower yet, right? We're still holding the macro level. I would argue that's a ridiculous assumption to make, and I would argue that's simply not the case. And that's due to many factors, such as the 4-year cycle theory. And if you're thinking about it logically, if both of these periods were a bull market, right, and this is a bear market, what makes you think we're going to hold this 30K support for a third time when we're in a bear market? Because the last 2 times we're in a bull market. Why are we in a bear market? How do I know that? Well, we can move on now and look into that a little bit. This is the 4-year cycle theory on Bitcoin. It takes into account the halving, and it kind of tells us, where Bitcoin is cyclically on a macro scale. You'll notice that every 4 years Bitcoin's on halving, and it triggers something called the 4-year cycle trend, in which we have 1 year of bull market, 1 year of extreme bear market, and 2 years of accumulation, right? So essentially, 1 year bull, one year everything goes up. We know what those are. It's 2013, 2017, 2021. And we have a year of dropping, which is 2014, 2018, and 2022. And then the years of accumulation will be the next 2 years for Bitcoin. And it was the years after. So it's 2019, 2020, and 2015, 2016, right? So again, 1 year up, 1 year down, 2 years accumulation. That's the 4-year cycle theory on Bitcoin. Lots of people like to say 1 year bull market, 3 years bear market. I wouldn't necessarily say that's the case, because generally speaking, we get most of the dropping done within the first year, and then we just kind of move sideways into the next bull market. So I would say it's 1 year up, 1 year down, 2 years accumulation. We're in the part in which we see the year down. 2022 is the year down. And as predicted by the 4-year cycle trend, in which we have many trends forming with date ranges. For example, in this red, orange, and green writing, you can see the trend is quite clear from the last 2 cycles. And that trend predicted the fact, I should say, that the November top was in fact valid, and the November top was in fact to basically the week, which is very precise in a macro trend, the top of the bull market. And it also predicts that in November 2022, we should most likely be bottomed out on Bitcoin, right? So in November, possibly before November, around that region, however you want to say it, is a bit of a rough trend, we should be bottomed out on Bitcoin. Where will we bottom out? As per the current trend, that doesn't mean it's going to happen again, but as per the current trend, we have to assume that Bitcoin will bottom out on the 200-week SMA. What we can do to understand this a little bit better is actually flip over the chart. I'm going to be doing this more regularly in the future because it makes a lot of sense to me. What we can see is that Bitcoin, essentially, this is the inverted chart. This is still the Bitcoin chart. It's just flipped upside down. So what we do is we go downwards, right? When we break the red line, which is the 50-week SMA, we end up at the green line, reject off of it, drop back down. When we break the red line, which is the 50-week SMA, we end up at the green line, drop back down. When we break the red line properly, right, we end up at the green line, and then we'll probably drop back down again, right? Flip this around, and what does it look like? It does this, right? We bounce upwards, we drop below the red line, we end up at the 200-week SMA, the green line, we bottom out on the 200-week SMA, and the same thing repeats over and over again. That is the trend at this point. And so if the trend is to continue repeating, which we have to assume as investors, because obviously invest with the trend until it ends is the #1 rule of investing, we have to assume that Bitcoin will continue downwards towards the 200-week SMA, which is currently at 22K. We're currently at 30K, and so we've got a bit further down to go on Bitcoin as a minimum, right? That is the minimum it can go to, right? So as I'm saying right now, we can definitely go below the 200-week SMA. It's definitely possible. We can even go to 12 to 14K on Bitcoin. I've looked into that theory in the past. However, the highest possible Bitcoin bear market bottom we can have is on the 200-week SMA at 22K. This isn't a newer thing I've been saying. This isn't something I've been saying for 2 weeks. This isn't something I've been saying ever since the recent drop. This is something I've been saying since literally November 2021 when we were up here at 63K, right? I'm not just making this up on the spot now. I'm not just flipping back to, like all these people flipping bullish, bearish, blue, bearish. This is an opinion that I've stuck by for a long time. And at this point, it's still playing out perfectly. Now, what would it take for me to flip back bullish? Heaps of people ask me this all the time. Heaps of people already know the answer. I'm sorry for repeating myself. It needs to be said. I need to be seeing Bitcoin breaking that macro trend in order to be bullish again. What needs to happen for it to break the macro trend? Bitcoin needs to get back above the red line on the weekly chart. It needs to get back above the 50-week SMA. The 50-week SMA is currently at 44K. If Bitcoin can break above the 50-week SMA without bottoming out of a 200, that would signify to me that the trend of us breaking the 50-week and ending up over 200 over and over and over again is finished, and Bitcoin is ready to start a new, unique, individual cycle away from the current trend. Break above 44K decisively, whatever that word is, and we will be entering a new bull market on Bitcoin, in my personal opinion. However, I think that's unlikely until we've bottomed out on the 200-week SMA. Moving forward even further, we have the weekly chart and we have the Gaussian channel. I'm going to go ahead and refresh this chart because I actually was looking at this before the daily candle close or weekly candle close. Give me a second. Now, the weekly chart, we have a lot to talk about, especially due to the correlation between the S&P 500 and Bitcoin. Now, obviously, history has been made here on the weekly chart, but we'll look at that in a second. Firstly, what we want to look at is the Gaussian channel. The Gaussian channel has only flipped red on 2 occasions in the entire history of Bitcoin, in 2014, and in 2018, both preceding a large drop, or at least in the midst of a large drop. Now, the Gaussian channel, I don't know how it hasn't flipped red yet, but it will soon, I promise. And that will be flipping red for the 3rd time, and that's we can't get past that at this point. It's too late. It will be flipping red. It's a certainty. Within the next week or so, I don't know. We'll be flipping red for the 3rd time in the entire history of Bitcoin. Obviously, it's a bit bad thing. It's a bearish thing because obviously the only other 2 times we've done it is before a massive drop, and so we can expect potentially another massive drop, or at least we can expect the current drop to remain valid. Now, the interesting thing about things like the Gaussian channel is obviously they're lagging indicators. If we have a trend, and this is the thing with things like this, right? The Gaussian channel flipping red is not a reason to expect a drop, right? It's a lagging indicator. And so a lot of people get confused here. Because it's happened 2 times in the past, okay, people have identified in this cycle that this is a trend, and they've sold off prior to it flipping red. And that's why we're seeing this correction preemptively before it even flips red, because people are expecting it to flip red, and so they're reacting before it happens. And as you guys would know, the only reason the price moves is because people are buying and selling. If a lot of people think a bad thing is about to happen, they're going to sell beforehand, and that's a similar thing to what we're seeing on the 3-day chart. So if we go to the 3-day chart, for example, we have a death cross on the 3-day chart between the 50 and the 200. Okay, and again, just like the Gaussian channel, it's only happened 2 times in Bitcoin's history, and both times it happened before a 50% correction. Now, we've started correcting before we even saw the death cross because people were expecting it to happen and they were preparing for it to happen. And so now that we've seen the death cross, it's not a reason to expect further downside anymore. The downside that it was triggered by the death cross already happened before the death cross, and people get very confused about things like that, but I just wanted to clarify there. Now, the important thing I want to talk about on the weekly chart, and this is very, very important, is that history has quite literally been made here. And I should have brought this up first thing in the video. That's okay, though. I've simply forgot about it until this part of the video here, but essentially 1, 2, 3, 4, 5, 6, 7, 8 red weekly candles in a row has never, ever been achieved on Bitcoin in the entire history of Bitcoin. In fact, 7 has not even been achieved on Bitcoin. This is not a world record. This is actually 2 world records in a row. We've never seen 7 red candles in a row. We saw that last week. Now we've seen 8. It just gives you an idea of how strong the bearish trend is right now. Why is that happening? It's very simple. The S&P 500 has seen 1, 2, 3, 4, 5, 6, 7 red candles in a row, right? This is interesting. The only time Bitcoin sees 8, not only 7, but 8 red candles in its entire history is during a period of time where the S&P 500 sees 7, right? And this goes to show how strong the trend is between the S&P 500 and Bitcoin. Now, the sad part about this is that the S&P 500 is correcting largely due to recession and largely due to interest rate hikes, which are going to continue in the future. And so we have reason to believe that the S&P 500 will continue to correct. And so, given that and given this trend, we have reason to believe that Bitcoin will continue to correct as well. And that is a case to be made that the Bitcoin bottom is not in. And it's also a case to be made that it could be a lot lower than 200-week estimate. It could be 12 to 14K bottom. Now, I'm not going to say anything about that. I'm just telling you it's definitely a possibility as per the current trend, right? Now, we have a few questions here, 3 separate questions from Twitter about very compelling topics that you guys would all want to hear about. Before we get into any of that, I want to get into V.I.P membership for Wolves of Crypto. I want to get into the Crypto Academy, and I want to get into the BitGet exchange. Now, BitGet is one of my favorite exchanges here. I use personally Binance and BitGet as my two exchanges for day trading. BitGet I mainly use for futures. Now, a lot of people think I don't trade leverage. I don't trade leverage, but I trade 1x short positions quite often, especially in the bear market. It's a lot easier than trading little scalp trades for long positions. BitGet is great for that because it's a no KYC exchange, which means it doesn't need to know your location to use it. You can use it wherever you are. It's also pretty good for tax reasons, as you guys can assume. I don't need to explain that. But they also have the lowest fees in the game, even lower than that of Binance at an average of 0.04%. That's the average fee for spot trading and for futures trading, which is insanely low. I mean, it's twice as low as Binance, and Binance is well known to be the lowest in the game. So go ahead and check out a BitGet with my referral link in the description below. Moving forward further, we have the V.I.P membership for WOC exclusive, not WOC exclusive, for Wolves of Crypto, I should say. Essentially what we have here is you get loyalty badges next to your name for 40 AUD a month, so 28 USD a month. Loyalty badges next to your name, custom emojis to use in the live chat, exclusive altcoin trading signals, which is one trading setup every second day. So if you guys are struggling to find trades, I can just give you them, right? And you can look into them for yourselves. And then I'll prioritize replying to your comments, and you'll also get access to a 2-hour video on market psychology, which is exceptionally useful. Moving forward further, if you want to take the bear market as a time to learn how to trade for yourself, or I should say, Mega Whale Crypto and myself, a fellow analyst, have created a Learn to Trade course called Become a Trader, a 10-unit course on TA, right? So this will kind of teach you everything you need to know about crypto in terms of what crypto is and how it works, and then all the way through to market patterns, indicators, candlestick formations, everything you need to know about TA, market psychology, advanced risk management, how to find trades, and you can chuck us an email here at cryptoacademycourses@gmail.com, and we'll send you that payment information and relative course information, also what it looks like, etc. So even if you're slightly interested, go ahead and chuck us an email and we can show you what it's all about. Now that's all done, we can move into the rest of the video, and that being the questions from the Wolfpack. So the first question, how do you personally take profit? Do I take profit after a certain percentage gain? Now, I take profit based on what the TA is telling me. And this is it seems very simple to some people, but people actually genuinely don't understand things like this. I don't go into a trade and I'm thinking, all right, I'm going to make 10% profit every single trade. That's not how it works, because some trades are going to give you 10% profit. Some trades aren't going to give you 10% profit. It depends on the setup. This is exactly what we teach in Become a Trader. If you're not familiar with TA, you can go ahead and check that out. It tells you how to make measured moves based on market patterns, indicators, and trends, right? If you're in a bearish trend, you're going to be lowering your expectations. If you're in a bullish trend, you're going to be raising those expectations. Market patterns actually predict price movements, and not only market patterns alone, but in conjunction with resistance and support levels, whether it be diagonal or horizontal, volume profile, things like that, MAs, etc. You can actually take profit and schedule a take profit in a zone in which it's consistent with the data and the maths, rather than just guessing, right? So how to answer that question? Well, I take profit based on the individual chart, not based on what a number I have in my head that I want to achieve, because I can think something a lot. I can think it, you can't think a chart into existence. If I think Bitcoin's going to go 100K, I can't just think that into existence. It actually has to have the mathematics to support it, obviously. So next question here. Love to get your thoughts on some analysts believing the market has been in a wave 4 correction since April 2021, and that the market can be viewed as a series of waves rather than an arbitrary defined cycles. Now, this is going into Elliott wave theory. I heavily disagree with the use of Elliott wave theory in any serious TA. A lot of people disagree with me on this. I know it's a controversial opinion, whatever. The point being is because I don't necessarily think there is a consistent, agreeable, I guess you could say, fundamental foundation of what determines what is a wave and what is not. Right? And so, for example, on the Bitcoin chart right now, this might be hard to explain here, but I'm going to try my best to explain it. Some people would, for example, say that, okay, so this is a wave, this is wave 1, this is wave 2, this is wave 3, this is wave 4, this is wave 5, and then we topped out and dropped down, right? But then some people would say, this is wave 1, this is wave 2, this is wave 3, this is wave 4, right? And it's like, well, what's the right one? It's all subjective. Elliott wave theory, unlike other traditional methods of TA, like market patterns, like indicators, like volume, is way too subjective. There's no subjective way to draw a valid market pattern. Market patterns are based on mathematics. They're based on the volume, and they're based on how many touches you have on either side. You can't screw up a market pattern. You can screw up an Elliott wave theory, and you can draw a wave however your bias fits to make it fit your overall plan in the market, right? If I'm bullish right now, I could so easily just make some, BS Elliott wave theory and say, oh, look, the next wave needs to come. And I could do the exact same thing if I'm bearish. The point is, it's way too subjective, and so I don't use it. And see, this is the thing. People disagree with me on it, but that's because they have their own personal bias as to what forms an Elliott wave. They need to understand that other people have different biases, and there's no telling which one's correct. It just simply doesn't exist, right? I think it's way more, simple to me to take a valid trend like the 4-year cycle theory, which I've actually deleted here. Let me bring it back up. Like the 4-year cycle theory, understand the correlation between the date ranges here and apply it to the future rather than making imaginary waves and just kind of guessing, because that's all it is. It's just guessing at that point. Third question. If you find a good altcoin trade set up to trade for the short term, but Bitcoin looks weak, do you avoid the trade? So essentially, as cryptocurrency investors, we need to be worrying about Bitcoin. Every single trade I take, every single trading plan I make, especially in the V.I.P, I make it very, very clear that it depends on what Bitcoin is doing. If Bitcoin is breaking downwards, if Bitcoin's in a... So this is actually a really good example of the current price action, right? Bitcoin has been in a bear flag formation, okay? So any trade you take while Bitcoin is in this formation, any trade you take, you can still take the trades, but any trade you take while the Bitcoin is in this formation, you need to understand that as soon as Bitcoin breaks to the downside, get the hell out of that position. Get the hell out of that position, right? And as soon as Bitcoin breaks to the upside, look for more positions. Start entering positions. So yeah, 100% you're basing trades off Bitcoin as well. If Bitcoin's about to break downwards, it's probably not the best time to be entering a trade. That's where patience comes into it. All right, without further ado, I'll end the video there. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.